All right, the S&P 500 and the Nasdaq 100. We look at the Nasdaq and you made all-time highs and you pushed into our target around 19,000. We talked about 2-3 days ago. We came to that level and then we saw a little bit of a sell-off, and that's what we're talking about today. Is this sell-off happening? Are sellers stepping in? And are shorts really back in the market? That's what we're talking specifically about today. You go into ES, the S&P 500. We saw a little bit of a breakout, but really couldn't hold too much of it. 53.33, the low we talked about, broke back down, and we're coming back down to support. You're also seeing that Nasdaq is bouncing off that support we talked about as well. We had our previous all-time high around 18,707, but the 18,616 level as well, where we held previously. When we get that, break, retest, and shoot back to the upside. Now, the big concern here, the very big concern is the Dow. And the Dow was the bad news bear on the day, right? Over the past 2 days, you've essentially dropped almost 900 points on the Dow. Kind of incredible, from like 40,000 all the way to 39.1. Brutal sell-off. And you've seen, you coming back down to all those little supports we have down here. So this is the worrisome part as of right now, is that Dow's finding a lot of sellers, and this could be leading into more selling happening on the broad market. The other thing you're going to notice too is when we look at some of these equities, again, let me just bring this over so you can see, there's a lot of red across the board. Now, granted, the Nasdaq did turn red, but the areas of the market that really had positive movement on the day were, one, Nvidia, Microsoft, and that's kind of it. You had a few other names that had, little glimpses of green, but the rest stayed red for the better part of the day. So that's the really big point right now is today, I think it would kind of hid some of the red and the bearishness out there from some of the sentiment as well. And we'll attack exactly what we're looking for and why we're looking for it here in a sec. And now let's briefly talk about my favorite investing app and the sponsor of today's video. If you're interested in trading the exact same broker in which I'm using for options and what I'm doing market research on, this is exactly who I'm using. This is Moomoo. This is their platform on their desktop. You can also check it out for the mobile app as well. This is their live news feed. And if you're thinking about making the switch, right now is a pretty good time because right now they're doing a 1.5% cash reward up to $300 if you transfer in. Or if you're just getting started and you want to kickstart your journey, Moomoo is giving you 5 in each of the Magnificent 7 stocks when you make a qualified bonus. You can go down and scroll and see all of this. It's right there on their website. Check them out. The link is down below. Okay, now first of all, I haven't done like a show up video in a while. I've been trying to get everything cleared out. My house has been kind of a wreck. We're in the process of remodeling our new house and things like that. So I'm sorry, but I kind of want to make these like a little bit of a comeback as well so I can explain my thoughts in some of these areas. Now, number one, today, and we talked about it yesterday, I'll go into it. Goldman yesterday discussed that they don't see rate cuts happening this year. Today, we saw more of that outlook happen coming out in the market. We also saw jobless claims kind of slow down as well, as far as not reaching as big of a signal unemployment is rising as it was before, which is kind of why the data propped us back up here. Now, does that mean that we're bearish overall? I don't believe that, because if we look back at some of the data over the past 4 or 5 months, even though we've had some data that's been a setback, that hasn't been what's pulled us back. CPI, despite it being higher than expected, PPI, PCE, that has not pulled us down. What has pulled us down was some of the wars that we have no real say or effect in, right? So when Israel-Iran happened more recently, that's when we saw the sell-off, and everyone called us crazy because we were looking at this. We're like, well, that's why we're dropping. We're not dropping because of inflation. Inflation releases, and it's clear as day. Inflation, the numbers are released, and then we drop immediately when a new bombing happens, which isn't surprising, and it shouldn't really surprise anybody. But the part that we're going to talk about in this video with what's happening overseas is, despite what's happened, over the past 5-6 months, oil and energy prices continue to drop. And so, like we talked about in the last inflation reading, that you have to expect inflation reports to continue to stall and come to the downside as long as energy prices remain on this slow decline, which they have been. Now, again, on the other side of this, if we keep with this thesis that there will be no rate cuts until next year, that will slow us down. And I'll be the first one to say that I was wrong expecting these to come in June, July. It's looking like they're not going to happen right now unless we get some very big surprise data pulls. So as of right now, I do think I was wrong. So I'll say that right now. But looking at broad markets, looking at Nvidia earnings, looking at tech earnings overall, I see no reason why the stock market looks weak or is showing any weakness. I'm telling you that right now. We also had home sales come out today, which weren't that good either. But once we see home sales uptick, which again, I think going into the summer is a very big possibility, even if rate cuts don't happen. But if rate cuts do happen, they will. If we see DXY continue on the downside, we see like 30-year yields continue down. These are all causes for a risk-on environment. And that's what's been happening over the past 2 weeks. Now, again, I know we're at all-time highs, and I know some people are going to be like, Tyler, you're a hyperbole. It is what it is. I just call it like I see it out there. If we start to make lower lows, then again, we'll go short on the market once again. Yeah, we did it all 2022. We did it a little bit here in around April, right? We made money on those. But we're not going to jump the gun and be the first persons in, and hopefully not the first person out of a good trade. The goal is to make money where we see there's opportunity, not invent the opportunity and pray to God that the opportunity plays out. There's a big difference. I'm a trader in that sense. If you're an investor, you invest in what you believe in and you stick to it. You don't watch a YouTube video every day, and you certainly don't look at the market in a sense every single day like that as well. Let's get back to it. So the first things I do want to talk about are going into something like DXY and what's happening there. Because again, I think this gives you a broad case here, okay? And when we look at what's happening here, broad case, you have that 105 level, you bounce to the 200 SMA. Actually, our key level down here, 104.2. And you came back into 105. Boom. That's where we're at. Now, the question is how do we react from this point going forward? Do we continue bouncing up or do we come back down? I think tomorrow's going to be pretty big into seeing that. This is the daily chart as well. Going into the 30-year yield, okay? Holding the 200 SMA. We've talked a lot about this. We saw the break, the retest, continuation down. We want to see a break below 4.42. We get that. Good action, right? But you can see that we're in a little bit of a hard place. We're balancing off supports on the DXY. We're balancing off supports on 30-year yields. It makes logical sense where this balance is occurring, and how it's affecting the market here as well. And we're seeing a little bit of weakness kind of in those areas also, okay? I do want to go into VIX as well, just see where we're at. I don't cover VIX as much here, but it's also important to remember, because I see a lot of your questions about VIX, and people saying, well, you're at lows and you have to bounce. That's not necessarily true. You see that, despite this as being one of our best bull runs of all time, from basically last year to this year, we spent a majority of this time at lows, under $14 on VIX, right? And that's led to some of this great trending to the upside. So again, if we start to spike on VIX, I think it just gives us more leg room to get the continuation to the upside, just like it did here, from, end of March into mid-April, that led us to more upside on the market overall. So again, things I'd be looking at there overall as well. Okay. Like I said, with oil and energy, again, this is the craziest chart in my opinion. And if you're watching inflation numbers, things like that, if you break, this orange line right here is your 200 weekly moving average, right? 200 SMA, 200 weekly moving average, whatever. This is your 200 daily, the yellow one. As you can see, going back into 2023, you've bounced off the 200 every single time, on the weekly at least, every single time. It's marked your bottom. Now the question here is can you break below it? Because I'm telling you right now, if you break below this, it's going to get crazy. It's going to get bizarre, because the last time you broke below this, was COVID back, 2020 January, when you went to literally to negative dollars a barrel. It was crazy, right? But that's the last time you broke. Okay. Now I don't think that's going to happen there, but I think it's going to be difficult to get back above that overall level, or it's going to take a catalyst as well. If that happens though, during this times we were on the downside, and we're on the downside again here, inflation numbers were dropping rapidly. I'm just saying, this is just statistics and what we're looking at there. So things that I'm looking at and why I continue to think inflation numbers will get better and better, in my opinion, what I'm looking at there. Okay. Now, SPY cues really quickly before we move on to anything else. Now, SPY, you had a great pattern. You had the ascending triangle playing out. False breakout. You shot back down to your level 524.6. Again, I recommend that you guys have all these levels marked out that you see. Take a screenshot. It's free. I like free stuff. So again, your previous all-time high, you bounced right where you expected and needed you to bounce. Great move there. Okay. You take a step further, we go to Qs. We break, you had a great breakout, right? We had the ascending triangle, very similar, but tech did a lot of the leading. We talked about that yesterday. You drop back down. Relatively, Nasdaq's holding up a lot better than ES and the Dow. You can see the relative same level is down here at 450. Qs are holding up. So if we get down to tomorrow, I'm looking for 450 on Qs. That'd be my target to overall. Okay. I'm not going to cover Dow, but yeah. So again, a little bit further, NVIDIA, some of these other names. NVIDIA obviously broke 1,000. NVIDIA had some of the best earnings once again. I'm just letting you know. Expectations were 24.5. It came out 26, and they raised expectations for next quarter at 28 billion. And they just keep doing the same crazy shit over and over. Best earnings you've ever seen from a company, most likely. NVIDIA, though, in a perfect world, I'm going to tell you right now, because everyone's interested in like what's the trade idea on NVIDIA. If you, by some miracle, can get a push back down into this level, your previous all-time high, that'd be pretty incredible. I'm not going to lie to you. That'd be incredible. I don't really think that's going to happen, but we'll see. You have the 10-to-1 split also coming very soon. But again, yeah, the retest of like 974 would be incredible if you can get that touch. AMD, this is the one that I kept saying, like, if you want to play a sympathy play to NVIDIA with the earnings, play AMD. You heard me say it all week. And you had a good move on NVIDIA. You really did. It's kind of incredible. So you see this morning, you kind of open up way up here at like, I think 170.8. So obviously gapped up from like 164, which is the level we said long at. This is verbatim the trade plan that I mentioned yesterday. I said you probably want to close in your 173, be a little less aggressive, right? And again, crazy move. Gap all the way up. And yeah, you sold back off, but guess what? Like, it's still, you got the sympathy play in that type of movement, and you end up coming back down to 158.7, which is your next key level there as well. You lose that, and I think AMD is in trouble. Could start moving towards the 200 SMA down here. I'd be watching that as well. So under 158.7, and that's kind of bad news bears. But until then, yeah, I'd be looking for a bounce overall. Microsoft. This was kind of the most depressing thing on the day. I think Microsoft looked good as well all day long, but the problem is like you just never get continuation in the index for the better part of the day. You got back above previous highs to 430.87. You pushed into highs around 434, but it just moved down with the market. And for the better part of the day, it held up around 430 and then eventually just started falling back down. I like Microsoft. I still think it looks good, but it's like I always say, if the market's pulling back and the market's pushing you in one direction, it's hard to counter trade that direction. Meaning if the Nasdaq is going down, meaning most tech is coming down, then I probably want to try to trade tech to the downside and follow the overall trend of the market. That's the biggest thing I can say. So really quick, before we let you out of here, we'll go into some of these option change as well. Obviously, you're going to get more of a discount here now when it comes to trading NVIDIA. I still like the June contracts, what I'd be looking at. I think NVIDIA, if you're trading NVIDIA, you got to go out of the money. Just makes the most logical sense. That's my personal opinion. Do what you gotta do. You could even try, if you really want to, go like 2-3 weeks out, like the June 7th. There's still enough open interest to make money on these. But again, what I'd be looking at there. AMD, again, if you break back below that level, I'd be going to the downside on AMD. And I think there's actually a world in which you can trade AMD to the downside and NVIDIA to the upside, meaning you grab a little bit of a dated position on NVIDIA to the upside and go about 2.5 weeks out on AMD to the downside, meaning basically AMD is your hedge and you try to make your money back on NVIDIA to the upside if you get the bounce. That's how I'm kind of approaching this as well. So AMD, as you can see, very cheap contracts. I mean, on AMD, you could realistically go for 621s, go a little bit further out, do whatever you want to do. But you can still see like the 155s out of the money are very, very cheap, $2.90. And I think there's a really high possibility if you hold below your level on AMD, like I mentioned, that those can get in the money, in my opinion, below 158.7. You remember we traded it to the downside. So again, just keep it on your radar. Definitely would be watching AMD on the downside and would not be wanting to short NVIDIA personally. That's just for me. But yeah, so until we start getting more upside back on the NQ, which could happen tomorrow, in theory, definitely could happen. But again, y'all, you know how I react to this. I'm waiting for key levels, waiting for reactions, and attacking from that viewpoint. So I have to be patient, have to be trying to set up both sides of the trade as well for myself. And again, when I go into something like Microsoft, I like it, but like now it's just a tougher trade because you have more of this resistance up here at 430. I still think Microsoft wants to run, but you have your hands tied, and it becomes a much harder type of trade to engage in. Okay, that's just the way this is when you start to create clutter with some of the liquidity there. I also think, Coinbase was an awesome trade, but now you're kind of just trading in your range here and you can't get out of it. You're stuck in your overall box that you've been in it since like mid-April, right? Just trading sideways. So can't do too much there either, right? Netflix, kind of just sitting at highs, not too much. So the opportunities are shrinking across the board. You had some big ones, but now they're kind of shrinking and you have to pay more attention to broad market, how we're moving and how we're reacting to everything. So again, not as many options for me to look at today for you guys. I'll have more hopefully tomorrow. But again, that's what I'm looking at. That's really the only trade that I can see going on right now. How I'm going to be attacking this. If you have questions, comment down below. I'll see you guys tomorrow.